Hello, everyone, and welcome to our latest GoDaddy Hangout on tax tips. We have a great show here planned for you today, and a couple of awesome guests. So, with that, I'll let Laura start by introducing herself.
Great. Hello, everyone. My name is Laura Urivari. I work at GoDaddy here, and I've been working and helping small businesses on bookkeeping and taxes for many, many years. It's not something I was actually interested in initially, but it's something that sort of happened along the way. Before I was at GoDaddy, I worked at Intuit, which, as most of you know, makes QuickBooks and also TurboTax. So after talking to small businesses for many years, we see a lot of the same questions that come up over and over. So what we wanted to do was really just share some of that insight and the common questions that that come up along the way. And also today we've got our guest with us, Danni Ackermann, and I will let Danni introduce herself.
Thanks, Laura. So yes, I am Danni Ackermann, and I am known as the Danni App. Because what I've done over the last few years is really help people, it's apps, and check your apps, but really what I help people do is develop a business where they kind of have that sixth sense, that gut instinct on what they should be buying and selling and pricing to people. And that's what I do. Been on eBay since, good golly, 1998. And now am all over the place. Amazon, eBay, Etsy, brick and mortar, you name it.
Great.
Fantastic.
Okay. I think we can move forward on our slides. We've got the introduction, we've got Danni. All right, so this is our disclaimer. The intention is not for you to read it, but basically this says, as I mentioned, we are not tax advisors or legal advisors or financial advisors. The purpose of this hangout and this content is, again, to provide general information from what we hear from small businesses year after year. So we definitely recommend that you do talk to a tax professional or a tax advisor to help with your unique situation. Okay. So I'm guessing that many of you feel like this when we even talk about or think about taxes. We hear this over and over, and so the idea of talking about taxes for 60 minutes is probably 59 minutes too long, right? So I do like to just say this is not stuff that we like spending our time doing as, you guys as small business owners, but it's definitely something that's important and will really help you understand how your business is doing and then obviously stay compliant. So I do like to start with something funny. I find this, very funny as we all try to unsubscribe to all the mailing lists that we're on and we see. Like to start with something funny. I hope you enjoy it. All right, so let's talk about taxes now. So definitely ask your questions along the way as we go. Danni is going to share some of her perspective and what happens in her business along the way. But the areas that we're going to cover are some of the pre-tax questions that we hear over and over from small businesses. Some people might be filing their taxes for the first year as a small business, or some people might have been had a hobby and now it's morphing into a business. So we'll go over pre-tax questions. Some of the tax basics about filing and income and expenses and COGS. It sounds like a lot, but we've simplified it. And then for online sellers, there's the 1099-K form, which is a new form that's been around for a couple of years. And some of you may or may have not, may received it, may have not, may receive it in the future. So we'll talk about that. And then we will spend some time talking about the GoDaddy online bookkeeping product and showing some examples within there about the tax prep and how it keeps track of everything for you. Okay, pre-tax questions. The two most common questions that we hear over and over, the first one is, do I have a business or a hobby, and what are the qualifiers there? And basically, the IRS says, this is how you know if you have a business. If you intend to make a profit from what you're doing, if you depend on the income for your living, for vacation, for anything that you do, or if you've actually made a profit in the last 3 of 5 years, the IRS says that's a business. It's not a hobby. So the good thing about if you do have a business is there's lots of deductions that you can take that hobbyists can't take. And also, if you are just getting started and you perhaps haven't made money in your business yet, but you're losing a little bit of money, you can actually write off the loss as a deduction for your business. So that's a guideline of, do you have a business or do you have a hobby? The other question that we get is probably somewhat related to the first one is, do I have to pay taxes? So if you meet the business criteria that we just went through, the answer is yes, you have to pay taxes no matter how much or how little that you made. And again, this is the IRS making sure that they get their fair share of everybody who is attempting to make a profit. So yes, you must pay taxes. Okay, talking about filing and paying. For the purposes of this, we'll assume that most people here are sole proprietors, which means you are the sole owner of your business. And just so you know, about 80% of all small businesses in the U.S. are sole proprietors. So that means you file this form called a Schedule C, which is a business profit and loss form. And there's 23 million of those filed each and every year. So there are a lot. You file the Schedule C along with your regular Form 1040, and that's due April 15th every year. Okay. What about filing an extension? So some people will often say, oh, I don't have everything together, or I don't have time to do it, I'm running out, can't I just file an extension? You can file an extension which delays the paperwork that you file until October, but if you owe money, you need to pay that by April 15th, otherwise you'll incur some penalties. Now the penalties aren't that much, but you obviously don't want to be late on your taxes. That's not something that's good. So that's the one caveat with an extension is you can file the paperwork to you can file an extension to submit your paperwork later, but if you owe, you must pay by April 15th. That's one of the misperceptions that we hear about taxes and extensions. Okay, let's get into some of the tax basics. So one of the other questions is, what do I pay taxes on? So you pay taxes on your profit, and this is sort of the equation, and we'll go through each piece of the equation. So your revenue or your sales minus your cost of goods sold, which we will talk about. There's lots of questions about COGS a lot. Minus your expenses, which are different than your cost of goods sold, equals your profit, and that's what you end up paying taxes on. So in this case, it's really important that you have a way of keeping track of your sales, your cost of goods sold, and your expenses in an easy way that you can quickly not spend a bunch of time entering data, but automating this. There's a bunch of tools out there. Obviously, online bookkeeping from GoDaddy is one, but no matter what you use something to automate this so you don't spend a bunch of time and you have a clear picture of how your business is doing. Okay, so revenue, this seems like the obvious one, but that's all of the sales income that you earn from everything that you sell. If you do consulting, if you sell online, if you sell at house parties or go to craft shows, you do a workshop, all of the income that you earn, that goes in the revenue bucket. Sometimes people think it's only from stuff that I sell online or only from the craft fair that I went to, but it's really everything that you get paid for, that is the basis for your income. So that's the first. Okay, cost of goods sold. Cost of goods sold is basically, this is a very simplified version, but cost of goods sold is the cost, your cost to acquire or to make the items that you sell. So we'll go through some specifics in this and some examples as well. So what's included in the cost of goods sold, if you make items, say you make necklaces or bracelets, you buy thread and beads and fabric and buttons. Those are all the materials that go into making what you sell. Those are part of cost of goods sold. If you actually buy items and then you resell them, you don't make anything, sourcing, the cost of what you pay for the items that you sell, that is your COGS. If you actually resell something but you don't make anything. Packaging is also included in cost of goods sold, but the note here for packaging is it's packaging that is what the IRS calls an integral part of the product. So if part of what you offer is something that's especially gift wrapped, or there's a case that you have to put with the CD or video or DVD or something like that, it's items that are an integral part of the product. It's not actually the brown boxes or the bubble wrap, that type of stuff. And the key thing to note with cost of goods sold, where a lot of people get tripped up, is when it comes to tax time, you can only deduct the cost of goods when you sell something. You don't deduct it when you purchase it, and if you haven't sold items, you can't deduct those. And we'll go through some specific examples there. As we talked about, what's not included in cost of goods sold are any of your shipping costs or some of the packaging and supplies, you know, like tape and bubble wrap and those types of things. That's not included in cost of goods sold. Those are actually expenses. Okay, so here are a couple of examples to go through about if you make something that you sell. So on the left side here, we've got, these are the supplies that you've bought. You're going to say you make bracelets. You buy some beads, you buy some wire and some clasps. It costs you $475. And you're able to make 50 bracelets from those items. And so you figured out that your per item cost is $9.50. Now, one thing here, this is really important. It is important to know for all the materials you buy what you can actually make from that, so you can get a cost per item. Now, I know that's not as easy as it sounds, because sometimes you make things in different sizes, so it's not always super clean. But the idea is that you end up, if you make something, that you end up knowing what your cost per item is, because that's an easier way for you to do your cost of goods sold in your inventory. So you've got 50 bracelets, it's $9.50 per item. So how you track that, if you see, you go over here on January 14th, or January 2014, the beginning of the year, your inventory will say you've got 50 bracelets and your cost of goods sold for those was $475. Throughout the year, you sell some of those. You do your inventory on December 31st, and in your inventory, you've got 10 of those bracelets left, which obviously means you've sold 40. So what you would do is you cannot deduct the costs of the 10 bracelets because you haven't sold those. You can only deduct the cost of the 40 bracelets that you have sold. So what you would do is you would take the $95 and you would carry that over into your beginning of 2015 inventory. You could see there for 2014, you take your 40 bracelets, that costs $380. You can deduct that on your taxes because you sold those, but you'd carry over the 10 bracelets and the $95 in COGS into the beginning of January 2015. Now let's do an example if you actually buy your inventory and you don't make anything. So it's very similar. On January, in the beginning of the year, you bought 100 widgets and you paid $1 each for them. So your cost of goods sold there is $100. At the end of the year, when you do your inventory, you've sold 75 of those and you've got 25 left. So again, you're only able to deduct the $75 in COGS from the 75 widgets that you sold, and you take the 25 widgets and the $25 and you carry that over into your beginning inventory and beginning COGS for 2015.
Laura, can I jump in here for a second?
Absolutely.
Because I know this is a hot point for a lot of online sellers, is those cost of goods and determining how to figure those and do those. And this is why I want to stress to people that the buying is fun. It is fun to go out there and shop, shop, shop. But remember, you don't get to write it off unless you sell it. So that's just money you're like got sitting in a corner somewhere. I just kind of wanted to stress how important it is to actually have a plan to get that stuff listed and sold.
Yeah, that's a really good point, because I think what we see often is people will go purchase and then they will put it in the expense category, right, as an expense, when cost of goods sold is actually doesn't live in the expense category. It lives in the cost of goods sold, which you cannot deduct until you sell it. So then you end up, like you said, with a bunch of stuff that's just sitting.
Yep.
Yeah.
Lazy money.
Great. Okay. Cost of goods sold. Okay, let's talk about expenses. Let's see. I don't see my expense slide. There we go. Okay, so expenses. The IRS says you can deduct what they call ordinary and necessary expenses for operating your business. And basically, what ordinary means is it's considered something that's a common and accepted practice in operating a business like yours, right? So if you are an expert in jewelry making, and there's a jewelry show, and they're going to teach all of the latest, show the latest materials, the latest techniques, all of that. That is something that would be considered ordinary and necessary for you as a jewelry making expert to attend. So, you know, the IRS always has sort of funky terms, and you have to use some common sense interpretation, but ordinary and necessary is what they qualify. So this is just a sample of the types of expenses that you can deduct. There is a list that goes on and on and on, but everything from office supplies to education, your professional or legal fees. If you do go to a tax attorney to help you with your taxes, that's deductible. Your subscription fees for online bookkeeping, that is deductible, or any other services that you subscribe to, or software as a service tools for your business, those are all deductible. For a lot of eBay sellers, if you have a storage unit that you rent to store all of your inventory, that's something that's deductible. Danny, anything that you'd add on some expenses that that are deductible there related to online sellers?
Danny, I don't know if we can hear you right now.
Oops.
Oh, you know what? That's because I hit my mute button to keep it all nice and cold and nice and quiet here. So one of the questions that comes up a lot, because people go to events, they travel, and there's that little sticky area with your meals out and type things. Can you kind of maybe expand on that? You know, what's kosher, what's not with the IRS?
Yeah, definitely. So you're right. So the questions come up often about whether if you travel, and how do you sort of, if it's vacation and personal, if it's personal and business that you're traveling for, how do you sort of split those expenses? So the first thing is if it's just you, you will basically take the portion, how much time, you look at your whole trip and all of your travel, what portion of your trip did you spend on business, what portion did you spend on personal, and you basically come up with a percentage, and you're able to deduct that percentage of the total cost. I think my thought here is, I always say it's easier to explain to the IRS auditors that when you're trying to do the right thing than it is when you are trying to fudge through something. So, yeah. Yes. The other thing is, if you're traveling, specifically for travel costs, if you've got your family with you and you're doing some personal and you're doing some business, you're only able to deduct the costs, your costs that you've used for business. You're not able to deduct the additional expenses from your family actually attending. So
So can I get one more little clarification on that? Because a lot of people are coming out for the More Fun, Bigger Profits conference in May here in Las Vegas. Some of them are bringing their family, but say they're staying in one hotel room. So are you then saying that they can only deduct a portion of the hotel room?
Yeah, so that's the thing. So if you're, and again, this is where you sort of have to use your do the right thing gauge, right? Where if your whole family's coming and you've got one hotel room and you're all staying in it and you're there for 3 days, you have to assess what portion of that time of 3 days is dedicated to business and what time is dedicated to personal, and you have to come up with the mix on that.
Perfect. Thank you.
Yeah. The other thing, let's see, about personal, a lot of people mix their personal and business expenses, or they use, your cell phone, for example. You use it for both business and both personal. You just need to determine, for the entire year, your expense for it, whatever that is, what portion of that do you use for business and what portion do you use for personal? Maybe 60% of it is personal and 40% is business, or you have to come up with that assessment. And again, I think it's sort of doing the right thing piece of it. Okay, let's talk about deductions now. So deductions are also things that can help you reduce your taxable income. So you want to make sure that you're taking all the deductions that the IRS allows for small businesses. And these are commonly overlooked. We hear this a lot. So we'll go through a couple of the most common overlooked deductions: home office, mileage, excuse me, and retirement plan contributions. And we'll talk about those. But before we talk about that, I again like to insert something funny here. I thought this was really funny, and it says even if your dog does do his business in your basement, you still can't deduct it as office space. I hope the intent is not to offend anybody. I just thought it was funny.
That's good.
There's lots of questions about what you can deduct. Okay, so the home office deduction. Years ago, when people did not work out of their home and it wasn't common, the home office deduction used to be considered something that was like, if you took that on your taxes, it might be a red flag for auditing. If you hear that, that's just simply not true anymore. Again, years ago, people didn't work out of their home, so it was rare, but now many, many people work out of their home, and in fact, the IRS last year has made it easier for people to take the home office deduction. So, again, rules for the IRS. You have, the IRS says you must, if you have an office space, in order to deduct it, you must use it exclusively and regularly. So exclusively means if you have a spare bedroom in your house that you use for your office, you can only use that for your office. You can't also have a bed in there and have guests stay in there. Then it's not exclusively used for your office, so you cannot deduct the entire square footage of the room. Regularly, again, means if you use your office once a month, that's probably not something that's considered regularly for the IRS in terms of running a business out of your house. So there are rules about exclusively and regularly. But there are two options that you can take for the home office deduction. Oops, I think part of the slide looks like it fell off a little bit. But okay, so there's two options. The first option is called the regular method, and this is the method that's been around for many years. And basically that method says you can take the actual expenses of your home office and deduct those. The second option, and I'll get into each, is called the simplified option, which is basically a flat rate. And that was something that the IRS introduced last year, so to make it easier for people to take the home office deduction. Okay, so the regular method is basically this. You calculate the space that you use, the square footage of space that you use for your home office. Say it is a portion of a room in your house. It's 100 square feet. This is a simplified example. Then you calculate what percentage of your entire home's square footage is that. So if your home is 1,500 square feet, you use 100 square feet of that for your office. That's 6%. Your home office is 6% of your house square footage. So you would be able to deduct 6% of your rent or mortgage if you use the actual expenses method. Now, if you use that actual expenses method, this is a simplified example, but there is actually a form 8829 that you are required to fill out that shows all of the calculations and asks a bunch of questions, and it's actually quite complicated and can be cumbersome. And so what the IRS did was introduce this simplified option. And that simplified option is basically saying you can take, whoops, can we go back one to the home office? There we go. The simplified option is basically a flat rate. So you can take, if your home office is 100 square feet, they'll give you a $5 per square foot flat rate. So you just take $100 times 100 square feet times $5, and you have a $500 deduction. You don't have to go through all of the other calculations that we just talked about with the actual expense method. Now the caveat here is there's a $1,500 maximum deduction, so that's basically 300 square feet. So if your office is larger than 300 square feet, you might want to spend a little bit of time seeing just how much bigger it is, and it might come out that the regular method is perhaps a better option for you. But for most people, taking the simplified flat option is a great solution, much less work, and you still get the home office deduction benefit.
Hey, Laura, how about garages? How do they figure in?
Yeah, so if you use your garage to store inventory, it's very similar, right? But if you also park your car in there and store your lawnmower and your bikes and all of that, you cannot deduct the square footage of your entire garage. But what you can do is you can deduct the square footage that you use exclusively and regularly to store your inventory. You are able to use that space.
Hey Laura, we did have a question too on the home office deduction. Do you have to own your own home to be able to use this deduction, or can you rent and still do it?
You can rent and still do it. Absolutely. So the IRS categorizes it as business use of your home. So you don't have to own it. You can also rent.
Awesome.
Right. Okay, so mileage and auto expenses. This is another one. If you think about how often you drive for business, to the post office to drop off your orders, to sourcing trips, to events or conferences or fairs or farmers markets, you do a lot of driving for business, and that is a deduction that you're able to take on your taxes. Now, again, this is one of those scenarios where there's two options. The actual auto expenses, so you can keep track for the year of your gas and your maintenance and repairs, all of that. And what you would do is you would say, okay, for the year, I don't know, I drove 10,000 miles, 5,000, half of those were for business and half of those were for personal. Then you would be able to deduct 50% of all of those individual expenses. Again, that's kind of a lot to keep track of, but it is certainly one way to go. What more people do, and again, it's a simplified way, is if you take the standard mileage rate deduction. So for 2015, the standard mileage rate deduction is 57.5 cents, and that's up from 56 cents last year per mile that you drive for business. So the requirements here are that you need to keep a mileage log, and oftentimes people don't take the mileage deduction because keeping a mileage log is, tedious or too hard, but it's well worth it here. So the mileage log requirements are you need to capture your odometer reading at the beginning and the end of each year, so you can see how many miles were driven, how many miles were driven for the entire year. And then for your mileage log, you'll need the date of the trip, the number of miles you traveled per trip, round trip is fine, and then the name of the destination and the purpose of it, right? So on March 5th, you drove round trip to the post office. It was 6 miles, and the purpose was to mail the items that you sold. There's actually several apps out there that you can use to keep track of your mileage. Also, if you use the GoDaddy online bookkeeping product, in the mobile app you are able to track your mileage in there, and then it automatically calculates the miles you've driven and the times 57 cents, 57.5 cents, so it will automatically do it for you. So,
and Laura, I just gotta throw in. I was really bad about tracking my mileage. I'm really bad about getting into those good habits of pulling out an app. But there's such amazing apps now, and they make it so easy. They make it automatic. They Bluetooth in, and they know where you're at with the the GPS tracking, and you just got to tell it when you're starting and stopping. It'll keep track of it. The amount of money already I can see as deductions from my mileage is blowing me away.
yeah.
The ASD convention in town, I'm driving back and forth, and it's about 20 miles round trip.
Yeah.
That's a lot of money to start adding up. I've never done it.
Yeah, it really does add up and is something that's worth tracking. And again, if you sort of remember that formula of your revenue minus your COGS minus your expenses equal your profit, what you pay taxes on, the more ways that you can reduce that is good. And these are things that are, the IRS is, willing to allow. So that's great.
Yeah.
Yep. The other one that's commonly overlooked, we'll move to the next slide, is the retirement plan contribution. So the retirement plan contribution, I'm not sure if everyone is seeing the retirement plan contribution. There we go.
Yeah, it's going to. Before we jump into the retirement plan, actually there was a quick question. I just wanted to jump back to the home office deduction.
Great.
Someone wanted to know, for garage storage, do you add the square feet of the garage to the total of the home square footage?
Ask that again, sorry.
Do you add the storage square feet in the garage to the total home square footage? I'm assuming they meant if your office is 200 square feet, but your garage storage is 100 square feet. Do you add those together as one?
Oh, right. See, that's a good example of where it might be better to take the standard deduction where you have to calculate versus just the flat fee of the $1,500 maximum and the 300 square feet.
Gotcha. Okay. And then the other question on the mileage, I know you mentioned that there's apps out there for it. Do you know if we have an Android version of the app? I know some users said there's an iOS, but they weren't sure if there was an Android alternative.
There is an Android version of the online bookkeeping app, yes.
Okay, perfect.
Yes. Okay. Retirement plan contributions. So this is another one that's missed. So oftentimes, obviously, if you worked for a company, they usually have some kind of retirement plan contribution like a 401k that you would contribute to, and those contributions, again, are then tax deferred until you actually retire. But because you work for yourself, you need to create, you basically need to have your own individual retirement plan contribution, but you can, again, take those as tax deferred, so throughout the year as you contribute. And they do have ones that are specific to small businesses, like the SEP IRA or an individual 401k, and I won't get into great detail about those again because that's sort of a whole nother area, but the gist is the SEP IRA usually is much easier to set up, but it has lower contributions that you can make throughout the year. and then the individual or the solo 401k usually requires, it's more detailed to set up, and there's a little bit more legwork, but you're able to make larger contributions. So definitely do a little bit of homework on that one and figure out which one is right for you. But as you save and plan for your retirement, again, each year take the benefit, take the tax deferred benefit that those can offer you.
And Laura, can you say you have a spouse that has a 401k through their company, through their business? If you contribute to that, does that count too?
You know, that is a good question, and I don't know the answer to that question off the top of my head, but it's definitely something that we can do a follow-up on.
Yeah.
Okay. Yeah. Okay. The 1099K. So the 1099K is a new form that was introduced actually, excuse me, in 2012. And the gist of the 1099K form was this. It actually came out of this Housing Act in 2008 that had nothing to do with housing, but it was, you know, one of those government things that's like line 999 in the act. But it was basically a way for the IRS to now being able to see how much money is being processed in third-party processors and transactions, because a lot of this income was underreported or not reported, right? So if people didn't get a W-2 for it, or it was something that they didn't report, the IRS had no way of knowing how much transactions were happening through credit cards and through PayPal and those types of things. So the 1099K form is a form that third-party payment processors like eBay, like PayPal, Etsy, Amazon, Stripe, all of the companies that process credit cards, they are now required to send to the IRS and to you. Here are the number of transactions. Here's the total amount that were processed in credit cards, debit cards, through things like PayPal. And so it's a little bit it's a little bit tricky here. So the intent is to make sure that all the income that people are making from their business is actually reported. So who gets a 1099K form, though? 1099K forms, and again, this has only been out a couple of years, so as the form evolves, the criteria may evolve, but this is what it's been for the last couple of years. If you have $20,000 or more in sales and 200 or more transactions, then you will receive a 1099K from PayPal or Amazon or any of whatever payment processors that you're using. But you have to meet both of those criteria. So if you sold 50 items and you had $21,000, you would not receive a 1099K. And also, if you sold, you know, 500, you had 500 transactions, but it was for $19,000, you would not receive a 1099K. And for PayPal, the thing to remember is it will include all of your PayPal accounts under whatever tax ID. If you have the same tax ID on multiple PayPal accounts, it will sum all of those, because obviously it's for tax purposes. Okay, whoops. Okay, so the important thing to remember with the 1099K is on the left here we've got your Schedule C, and on the right you've got 1099K, and you might not be able to see, but the highlighted boxes there are the gross receipts box. And the main thing that, if you've received a 1099K, the main thing that you need to do is to double check that the gross income reported on the 1099K is equal to or more than what you're reporting on your Schedule C. So if your Schedule C says it's $10,000 and your 1099K says $15,000, obviously something is off. And what the IRS has been doing in the last several years is several people have received these letters. They're called notifications of possible underreporting, and there's a variety of them. Obviously, they increase in severity, I guess, depending on, it's not totally clear, but perhaps depending on the discrepancy. And there's a number of things that they ask you to do, whether it's submit, call, do more follow-up, provide additional paperwork. So that's the main thing that you need to do. Okay. So that gross payments box, the one thing, again, why it's important to keep track of your sales and your expenses and your returns and all of that is what's included in that gross payments box is all of your revenue. So from shipping, if you've collected sales tax, if you had some fraud sales go through, if you had returns that that were processed, but all of that information is not included in that gross payments box. That gross payments box is just one big total. So you would want to make sure, again, that you make sure that you've deducted all of your expenses and all of your COGS so that you're not overpaying in taxes, and it's not it's not viewed that that is actually your income. Or your profit, I should say, not your income. Yeah.
Hey Laura, I had a quick question on the COG. Kathy says she's a little worried now. She thought she can claim as COGS all of her thrifted items, whether sold or not. She said that's how they appear on GoDaddy bookkeeping. Is that true, or?
Well, it would be let's see, it would be how you entered them. So if you there is a COGS category that you could enter something in online bookkeeping. So yeah, actually it might be better to sort of take that one offline since it's really specific, and I don't know that I'd be able to sort of get to the root of it in
Can
here.
I address how I handle that, Laura?
Yeah.
Because I get exactly what she's saying, because as we're buying this stuff, we're using our PayPal card. It's getting categorized as cost of goods sold, Goodwill, Savers, all that stuff.
Yeah, okay.
But where the piece that online sellers need to keep track of is doing that year-end inventory, and unsold and unlisted items, you've got to subtract from that number. And I believe you advised me a couple years ago, you put that in as a negative on your cost of goods sold.
That's exactly right. Yes. Thank you for explaining. Maybe I think I wasn't clear on exactly what she was asking. So yes, in online bookkeeping, what you would do, Danny's exactly right, is at the end of the year, anything that you haven't sold, you would manually enter a negative transaction and categorize it as COGS, so it would deduct what you have not sold. Right, so in those COGS examples that we went through before, you would do a negative transaction in online bookkeeping, and then that would remove the portion of items that you have not sold. That's exactly right.
So get that stuff listed, you guys.
Okay. Okay, now we'll get into, for those of you that use online bookkeeping, we'll get into some specifics around online bookkeeping and automating your tax prep, and also just knowing how your business is doing. Okay, so basically, bookkeeping really just is a tool to help you know how your business is doing, be ready for tax time, and not have you spend a bunch of time and energy and effort entering a bunch of data into a spreadsheet that you then have to sort of make sense of at tax time because it doesn't have the proper categories. This is something that can absolutely be automated, and again, whether you use online bookkeeping or some other tool, definitely it is worth automating this part of your business. Okay, so the main thing here, and I'll go through some of these basics fast, is you need to link your accounts to online bookkeeping. And it's really important to link all of your accounts. Link your PayPal account, link your bank account. If you have a credit card that you use for business, make sure you link your credit card. And then along with any of your online seller accounts, eBay, Etsy, Amazon, you link your Stripe account. And the reason why it's so important to link your accounts is as we go through and we look at the expenses and the profit and loss and your Schedule C, if you don't have all the accounts that you use for your business, you're going to be missing big chunks of, for example, if you have a credit card that you use for your business expenses and you don't link those, you're going to be missing big chunks of expenses from your business, and it's just going to make it harder for you at the end of the year to try and make sense of it all. And also throughout the year, when you see your profit and loss or you see your expenses, it's not going to be a complete picture, which then makes it hard for you to really understand how your business is doing.
And Laura, can we just touch on too, as far as the checking account? Super important to separate your business, have a separate business account from your personal.
Yeah, that's a really good point, Danny. So within online bookkeeping, there is a way that you can mark an expense as personal, and then it will not be included in all of your reporting and your profit and loss. But the idea is that's more for, you know, onesie-twosie kinds of things. If you've got your finances, your personal and your business finances combined, again, it's more work for you to have to go separate everything versus establishing, here's a credit card that I'm using just for business, or here's a checking account that I use just for business. Might be a little bit of legwork up front, but again, it also gives you a much clearer picture of how you're doing, and it makes your bookkeeping and your taxes much, much easier.
I had a question too. So Jim wants to know for COGS, for proving the costs and how you document a price where receipts aren't normally given, like a garage sale or flea market or something. How do you do that? Is there a different process for that, or?
Yeah, so I think it's, you basically have to sort of create your own receipt, if you will, meaning like you know how much you paid for something. You don't have an actual receipt, but you do know that you paid, you know, $20 for this item that you purchased, and then you're going to sell it for $30 kind of thing. So you, it's something manual that you have to keep track of.
Okay, gotcha.
And Danny, I don't know if you'd add anything else on that based on how you collect and source your inventory.
So usually do cash at yard sales. In those circumstances, I pull out of the ATM, and at that point, I put it as cost of goods sold.
Yep.
And then, of course, I do the negative back for anything not sold or listed.
Yeah.
Perfect.
And again, if you have the mobile app, again, that's a transaction that you can add, you know, sort of on the spot. Yep. Okay. So you've got your accounts all linked. Then this is the overview tab for online bookkeeping, and the important things here, as I mentioned, is once all of your accounts are linked, here you can, it pulls in all of your data. You don't have to enter anything, so you can see your profit and loss. You can see on the left side what new sales you've got. If the app doesn't know something, it will not categorize it. Then you can go in and say, hey, this should actually be office expense, and please mark every other transaction that comes in as office expense from this XYZ as office expense. So it will get smarter, but this gives you the snapshot of your business.
And I love this. You know, for I do a lot of coaching, and my clients can go, and I want them to know those numbers. I go, okay, where are you at? You know, what's your revenue to date? And then bam, then go to GoDaddy Online Bookkeeping, just grab that number.
Yep. And it's constantly up to date, right? So as it does its nightly imports, it will pull in all of your transactions, right? So you don't have to keep up with it. It will automatically keep up with the importing of your data. So then within each tab, again, here you can go into the business income. Whoops. You can go into the, whoops, I'm losing my screen. You can go into the business income, and again, I've sort of grayed some things out for privacy here, but you can see it's got the name, it's got a description, and it's got everything categorized there. You can see whether it's sales, whether it's shipping income, it's Etsy direct checkout, it's a sales tax that was collected. And the great thing about this is, as it's pulled everything in, all of those categories are associated with an IRS category, which is part of your Schedule C. So you don't have to go back through and say, oh, I don't know what category for the IRS and my Schedule C this goes to. It's all in there for you. And then we've got the same thing with expenses. So with your expenses, again, it pulls all of the information in, and you can see the categories there. It's got meals and entertainment and PayPal fees, and And even in this example where somebody has changed or added a category called computer and internet, that's not a category that's actually in there, but you can modify that category and then make sure that it's linked to the right Schedule C category. And then, again, once everything's in there, this starts giving you the snapshot of exactly where your money is going, how much you're spending on advertising, on fees, on your cost of goods sold. It just starts giving you a clearer picture into, wow, I had no idea I was spending so much on office supplies, or it starts giving you a clearer picture into your business. And this is just one example of the reports in there. Again, the profit and loss report, this is probably the one we get the most positive feedback on in terms of, wow, it's really nice to be able to see throughout the year how my business is doing. Because people often, and I know this sounds silly, but people often do not know if they're making money or losing money. And so again, if you've got all of your accounts that you use for your business in the product, this will give you the clear picture. And if you're actually in the app, you'd be able to click on any of those bars and it would take you into the income and expense tab so you can see what actually makes up these totals here. Okay, for online sellers, this is something that's really interesting, is you're able to see your sales by state. So to orient here, in the bottom, you know, if it's a light color, it's fewer sales. If it's a dark green, there's a lot of sales in that state. So one of the things that we heard from one of the eBay sellers was, wow, I had no idea that I had so many sales going on the East Coast, so they were able to change some of their auction time end and start dates to accommodate times to accommodate more of that. So this is just really insightful to understand, especially if you have an online store or you sell in one of the marketplaces, where are people buying from? Okay. So now you've got everything in there. This is where the annual summary, where you see your tax information. So you see here you've got, here's your income, then minus your expenses, and it will show you your net profit. And this calculation is based on everything, all the information and all the data that you've pulled in there. So for your income, if you see there, it says $40,791. But it's deducted your refunds and your cost of goods sold for you, so you've got your true income there. And then all of your expenses that you've gotten down here, you can see they total $33,000 and some odd dollars, minus that, and then you see your net profit. So again, not something that you have to calculate. And if you see in the tab, you see a tab that says Schedule C. And so all of these are associated with a Schedule C line item. So if we go to the next slide, you'll see here's the Schedule C tab in online bookkeeping, and you can see there's 1, 2, 3, 4. You can see the list of each number over there. And then on the right side, you see the actual Schedule C tax form that you file, and all of those numbers correspond. So if you are working with an accountant, you can print out this summary and take it to your accountant. Or if you are working, doing your taxes on your own with a software like TurboTax or something, you can match up the line items from your Schedule C worksheet in online bookkeeping and enter that into the Schedule C in TurboTax or whatever software you're using.
I had a quick question too for you, Laura. So David wants to know, shouldn't his CPA be taking the 1099K number and subtracting off all the Amazon and eBay seller fees, and then subtracting the COGS and expenses?
Yes. So the gross receipts number will include all of that, but then you'll have to subtract the COGS number and all of your expenses number to get the real your real income or profit, I should say. Yes.
Perfect.
Yes. And then I know we've got just about 5 minutes left, so I'll quickly touch on estimated taxes. This is basically quarterly estimated taxes. So if you worked for a company, the company would be taking out taxes regularly out of your paycheck, but because you are a sole proprietor, that means you work for yourself. The IRS is a pay-as-you-go system, and so each quarter they want you to pay the taxes that you are owed based on your income. And so again, if you've got all of your information in online bookkeeping, it will do an estimated calculation for your estimated taxes. You can record the payment in there as well, and you don't have to worry about your estimated taxes.
So this brings up another question, and this might have been some of the confusion. So Dan wants to know, just like for timing to file, he was under the impression that he had to file every quarter. You're really only filing once a year, but you're paying your estimated taxes every quarter?
Yeah, so you do pay your estimated taxes 4 times a year, and there is a tax form. It's I can't remember the number on it. It might be, I can't remember the number on it off the top of my head, but it is a form specifically to pay estimated taxes. Yes.
Awesome.
And then sales tax, again, very high level on sales tax, because sales tax for online sellers, there's a whole bunch of, it's very complicated. There was just a ruling by the Supreme Court on Tuesday, so this is an evolving topic, but online bookkeeping also helps you keep track of the sales tax that you collected. And again, when you make a payment to your state, whether it's monthly or quarterly, I think most of them are monthly, you can record a payment here, but it will keep track of all the sales tax that you've collected. So when you go to pay the state, you don't have to figure out, like, for each transaction, how much sales tax did I collect in that transaction. That could be a really tedious piece. But sales tax is probably a whole nother hangout that we could do.
Oh yeah.
yeah, and constantly evolving. So we've got just a few minutes left, so please feel free to ask questions. And also, if you're not able to, we're not able to get to them, feel free to email me with your questions. I am happy to answer questions that I can for you or point you in the right direction.
Cool. I think this has been awesome so far. There was a lot of questions during the show that we got to. I don't see any new impending questions, but we'll give everybody a second here, since it has a little delay on what you guys say to what they see. Actually, Drew had a question. What was the ruling on the sales tax the Supreme Court just did?
Oh, let me see if I could sort of summarize. So it was actually, the ruling was that the rule or law that was created a long time ago that said states didn't need, out-of-state sales tax didn't need to be collected. They basically said, the point of view was, the ruling was, that is old and outdated and it needs to be revisited. And if somebody brings up, I'm not using the right terms here, obviously, but if somebody brings up a case, it would be in favor, the point of view was in favor of the states for collecting out-of-state sales tax, because the point of view was states are losing out on a lot of sales tax revenue, and the way the internet works today, it's not right, and so that old law from, it was many years ago, is outdated and needs to be revisited.
So they're basically just saying something's coming, watch out, you're going to be paying, but it hasn't happened yet.
Yes, nothing has changed today, but it was, the point of it was, the Supreme Court point of view was, hey, this is old and needs to be revisited, and who knows how long it will take, but at least it was clear that the point of view was in favor of states collecting out-of-state sales tax.
And can I just say, you know, because I know this gets into like the fear mode for a lot of sellers of like, oh gosh, it's, you know, too scary, too complicated, I just don't want to. You guys, if you're making good money, all this tax stuff, all of this sales tax stuff, it can be figured out. There are people, there are apps like GoDaddy Online Bookkeeping, there's people out there to help you. Do not let these things stop you from having a very successful business.
Good point. Yeah.
I like that. That's a great point.
Yeah, it really is. And don't try and do it all yourself and keep complicated spreadsheets. There are tools and apps out there that can do it for you.
Yeah, and then one question popped up for GoDaddy online bookkeeping. He hasn't linked his business credit cards because he uses one to fill up his tank, but he deducts the mileage in GoDaddy bookkeeping. Would linking that particular card just make things more confusing?
If it's just used for, well, you still need to keep a mileage log, so, right, so I would keep the mileage log. Well, again, okay, so this is the piece. You'd have to pick, are you going to deduct just the expenses, right? So the gas expense, that's different than deducting mileage. So if you want to just go with deducting the actual auto expenses like gas, then the way he's doing it is fine. If you want to move to the standard mileage deduction, then you'll need to keep the mileage piece.
Perfect.
Yeah.
And I think that's all we got so far. So thank you, Laura, for your time. Thank you, Danny, for coming and hanging out with us. I think this has been really helpful to a lot of small businesses out there, just judging from the questions that we got in and the viewers.
Right. All right, and then definitely, if you have additional questions, feel free to email me, and I'm happy to answer or point you in the right direction.
Awesome.
Great.
Thanks again, and we'll see everybody next time.
Thanks, guys.
Colby.